Hello and welcome back to London for another edition of London Direct. Now we're going to turn our attention to Germany and the latest Flash PMI numbers, which came in far above expectations, leading many to believe that the engine room of Europe is heading towards a sustained recovery. I'm rather sceptical about these numbers, but Anita Paluch from Gekko Global Markets is much less so. So these German PMI numbers were pretty spectacular. Can you give me any idea why?
They were indeed. If we consider the numbers we have seen previously, and everyone is thinking, oh, it's doom and gloom everywhere. And in fact, yes, Europe is in kind of recession. And if we look at France or Spain or Italy, it's not that well. But we have seen the Eurozone numbers. They were pretty good. We have seen German numbers, which were really spectacular, as you said. Also in France, we had some decent numbers. So. All in all, they were really good, heralding some sort of end of recession. And if we come back to your question, how can we justify it? I think it has been already somehow in the background, especially when we look at Germany. It has always been seen as an engine of growth, especially in Europe. So a country that can actually lead the whole region out of recession.
You said that the previous numbers had all been mired in this doom and gloom, but that doom and gloom surely still exists. It's not like there's suddenly a recovery in the French economy or the Spanish or Italian economies, and those are important export destinations for Germany. And you can say the same about China as well.
That's true, and I think it's a very valid question whether we can actually see more improvement in the region as such. Obviously, Germany is relying heavily on the Eurozone in terms of export, and whether it will continue depends heavily on how the whole Eurozone and other countries in the region will be doing. So it's again a question of whether everyone can pull together and pull themselves out of the recession, and also whether China will help out as well, because we have seen recently China isn't doing that well. Yes, it is good in a way that it heralds end of recession, but at the same time, we have also seen that the employment isn't catching up as quickly as it probably could be catching up. So yes, we need to look at both the PMI numbers, which were very good, and also something that will support in longer term the employment.
I still get slightly confused by the numbers because, for example, if we look last week or the week before, there was the monthly car numbers, and obviously Germany's a big car maker, and they're almost uniformly bad. So surely that same question remains, that there's no growth out there.
Well, if we look at the car market, yes, indeed, we have seen very low numbers, and that's pretty depressing, let's be honest. But PMIs are capturing the whole private sector activity, and we have seen the manufacturing numbers, which were really good. So they exploded through the roof, actually. So if we look at the car market in isolation, then yes, we might have an impression it's not doing that well. But if we look at it all together, and I think that's what we should really be doing, then it's improving, and I think we should be holding up to that. That's
fine, that's your point of view, but generally speaking, what does this mean for the equity markets? Again, off the back of these numbers, also earnings season, I think across Europe, the stock 600's at a 7-week high. Do you think that those highs are justified, or is that all just going to come tumbling back down when reality strikes?
What do you mean by reality? I mean, we are looking at the PMI numbers, which are considered to be the best leading indicator, and obviously the purchasing managers, they have best insights into the company's numbers, what they are doing, what they plan to do. So if they are saying it's going to be better, then obviously there is something to that, right? So I think investors are also looking to some sort of support of the views. So all in all, especially if we look at Germany, the numbers came back also on the back of the demand, the domestic demand, and I think that's the right structure for the growth. I mean, Germany is doing the right thing. They are concentrating on the domestic demand, and also they are looking to improve their export as well. But in as much, it's the right structure going forward.
You're clearly generally a much more optimistic person than me, but so generally speaking, what you're saying is that you think these numbers are an indication looking forward that we're on the road to some sort of recovery, and because it's easy to say that we've been here before, that okay, PMI numbers start to look better again, and then something will happen in France or in Italy or in Spain, and then that just crumbles away again.
Yes, optimistic. Yes, in a way, we have seen Germany has coped quite well in the beginning of the crisis when it kicked in, and then it had a little bit of hiccup really. So there were some concerns whether Germany could be the engine growth for the whole region. But obviously, we are seeing yes, it's catching up, it's doing well. So yeah, there is hope.
Well, thank you to Anita for some great analysis as always. Stay tuned to Dukascopy TV for more interviews and insights. But for now, goodbye.